Hi, social media world. My name is Alfred Gordon-Liu. This is 8 at 8, and 8 minutes starts right boom now.
Hello again.
I'm never gonna get this show right with you guys always here at 8. I got to move the show and call it something else, not 8 at 8. But hey, you're not supposed to be brushing your teeth on TV. Come on now.
Okay.
You finish your teeth and you can come. But today we're gonna be talking about this company right here. Do you know what BAC stands for? Stands for Bank of America, right? So we're going to be taking a look at the technicals on Bank of America. Let's get to it, all right? Just because we don't have that much time. So we're talking about technical analysis. This is Bank of America. We're on the time frame monthly. And this is for you positional traders. All right, so these are people that want to buy or hold or thinking dollar cost averaging is their thing. So we wanted to talk about if you are that person, a positional trader, you're holding a position. I want to show you what to look for while doing this, because my main thing is I don't want you to lose money. So this is a monthly time frame. I had created these circles. Yes, the first circle I want you to look at is this wonderful simple moving average. You'll see here that it is a wonderful green arrow. So it's moved above its average. So the price is above average. The next circle I got here for you, we're just doing three things every time, is this one. This is our MACD.
This one
is our MACD, which means that there's going to be more sellers than buyers. See, look at that green arrow?
Yeah.
Right here. And then the last one that we have, the third thing that I want to talk about, is our slow stochastic. And we're
stochastic?
Yeah, that's a hard word to say, huh?
Stochastic.
That's right, stochastic. All right, we're looking at this one, simple moving average, our MACD, and our stochastics. And if we look here, this trend at this arrow is going up. So that means people are becoming a little more greedy, or they're hoarding it. They want to get this. So the momentum is going up for people buying it. So that's what we're looking for in here. So you know that you're in a good spot, and as you can see, we're still in this wonderful bull trend going up, so it's great to hold this as well. All right, so that is for Bank of America if you're a positional trader. If you are a swing trader, meaning that you want to hold it and then maybe sell it next week, we're looking on a daily chart. And the tools that we use here are something different. It's a different kind of study. I'm going to load it up here. It's called Bollinger Bands, and essentially Bollinger Bands are tracking volatility. So I'll get my circles out here again. I got 5 minutes. I'm going to zoom in here, and let's get these circles out again. Boom. So the first circle I am going to show you here are these wonderful bands right here. So you'll see there's a top band, there's an average band, and then there's a low band, right? So you'll see green. Is that green? Is that purple? That's green line, and then a red line as well.
Hello.
So when you hear people buying the dip, right, for swing traders, this is what happens. This is the average. This green line is the average. And when it dips below this, you have a wonderful buying opportunity. But when I look at these dips, you're going to look for these crazy, crazy volatile times, like this one here, where it is totally dipped outside of that, right? And that is a tremendous buy. That is a tremendous sell signal, or you're going to get out. Or if you are looking to obtain a position, that's a position to buy, right? And then how do you know when people are greedy, right? Is this right here. It pierces through that Bollinger Band. That means it is just going nuts, right? And you can see it also if I look down here at the volatility, and you can see it peaking at certain points, right? Just like how when we had a wonderful dip here, you can watch it peak, and then you'll see that the volatility increases, so you're seeing gaps in those prices, either gapping up or here gapping down. And look at that intense volatility right here. And then again, that one right there, you're watching a major gap down. And why does this all happen, right? The markets go up and down, of course, but there's one other thing here that I want to show you as a swing trader. Is this, or a momentum trader, are this line right here. You'll see this, you'll see this, you'll see this. The greens are actually dividend calls, or so when you get dividends awarded to you. But we're really interested as traders or swing traders are these ones. Look at this. See that red telephone? What is that? What's that red call for help or 50-50? You'll see here that these are earnings calls. And if you're gonna ever invest in a business, this call is when a CEO or CFO gets on a call. It's usually transcribed, and then they talk about their company, their projections, what they're doing, how they're doing. So this is when CEOs are accountable, or chief executives are accountable. And you'll notice that once they report, maybe during the day or after trading hours, you get a tremendous shift in volatility. It can be to the downside, right, that you'll see here, or you could see it here again to the downside, and you always want to look for this wonderful thing. So again, you're looking for sell signals or buy signals at the top or bottom of these Bollinger Bands. That's what I want to show you. This is your volatility. You can see it changing, and it's going to be crazy and moving. And the other thing for swing traders is looking at this very important earnings call. For any investor, if you're looking at a single company, earning calls are crucial. With 2 minutes left, I got to move on to a different time frame. Here we're gonna go to our day traders. Everybody loves this. Day traders.
Day traders. Day traders.
We really gotta get a different time, or just lock them out. So
You
this
can't
thing in
lock
here,
me out.
we're gonna look at our Fibonacci. So as you can see here, it looks like a percentage sign. You can't see it, but it says Fibonacci retracements. What we usually do on these wonderful retracements is we're looking at 5 days of trading. And what I like to do is I like to go to the low, and then I go to the high, right? So you just see that, and I draw. And what the tool does is it automatically draws these special lines. And where this comes from is it is like the golden ratio, right? This wonderful mathematical symbol that we would see in nature. You'll see it in sundials. You'll see it in like architecture. You even see it in Mona Lisa's face, right? And with 50 seconds left, I better get to it. So you'll see that the pink lines are where a lot of resistance or support will happen. And if I just activate this again and draw it, activate, there you go, I can use it to match it up specifically where there was a lot of resistance, a floor, or a ceiling. So as you can, I move that there. I like that spot right there. So as you can see, if I zoom into this with 15 seconds, I'm going to pause this because it's my show. I can do whatever I want here. I'm pausing it.
I'm pausing it.
I'm pausing it.
I'm pausing it.
As you can see, Bank of America has hit a ceiling at these certain intraday trading. So you can see at this level at 49.52, you can see it hit that ceiling. But at this day, today, it's pierced through. Look at this. So at 7:15, it's pierced through, and that's an indicator that it's going to go up. Where it's seeing its next resistance, look at this, how this magical Fibonacci kind of understood where it's going to go. It's at 49.75. So most day traders will look for these wonderful breakouts. And where are my circles? My circles. There you go. What they're specifically looking for are these spots when they're crossing those specific lines to the up or to the down. And so right now, Bank of America is rallying up, and this is what they're looking for. And most traders for the day are looking for a spread, right? Say it, spread.
Spread.
Hey, thanks for wearing a mask. And here is what we want to talk about, the spreads. We're looking for the distance between this and that as well. So how do they know if it's going to peak? They're looking at this, and you'll see that we can definitely see that it is reversing its course. So I'm going to zoom in here for the day. As you can see, I'm going to move my circles. Oh, that's a little too close.
And move our Rubik's Cubes.
Move our Rubik's Cubes.
This is actually...
Hey, my show, yo. Yo.
Yo, Daddy, whoa.
Yo. So this is a breakout. Again, that's what happens when it goes to the upside. This is what happens when it hits a ceiling, right? The other thing I want you to know here is I don't have a circle on it, but I want to show you as an intraday trader, one of the most important things to do is to come on over here. It's not on the charts, but it's really, really important to know is this. our wonderful earnings, not earnings calendar, where you could get that too for Bank of America. You want to check these dates. The next earnings call is about April 18th. But you want to come to Yahoo Finance as well. Look at their calendars and look at this specifically, our economic events. If you click on that, economic events, this is essentially crucial for a day trader to know. And I'm going to move my body here. This is what you're looking for. So the time now is 8:10. I'm going to scroll here. This is all Eastern time, so 8:10, 11. So we're looking at this right now. I don't know if you can see that. I'm highlighting that. We're around here. So what has come out is, I don't know LV, the country code for LV or PT, but you'll see in the US, the next big economic event that comes out in an hour in the US is the 30-year mortgage rate. And is that going to affect the banks? Oh, I think so, right? That could definitely affect banks. Look at here, mortgage refinance index. We'll look at retail sales. And then the next thing I look at is, this will affect my company that I'm investing in. Yes. And then I look over here to the next things are, what are the actual reporting? What is the market expecting? And has it been revised? What causes volatility is surprises in the market. The market doesn't like surprises, but as day traders, you take advantage of that surprise. So right now we're expecting an 8.3, a little bit better than what they have said, 3.75 prior to this. So they're going to do better than they did before. I don't know if you can see that there. I'm going to move mine. So the market is expecting 3.8. It has done 3.7 in the past. What the actual report at 12 o'clock today, or 9 o'clock my time, Pacific, is what's going to give it its volatility or the momentum to go up. And as we can see, I think it's going to be better than expected. So if it does report, but if it goes bad at 12 o'clock, we could see that definite reversal. So that's what you want to go back to our wonderful charts to look at and note moving forward at 12 o'clock. Look at all those circles have changed. We could see a breakthrough, or we could see a downturn depending on what they report. So those are the things that move intraday. And I'm going to start playing again. Boom. 10 seconds left. Going back to here. Thanks for joining me on this wonderful 8 at 8 TikTok 20, talking about Bank of America. All right, everybody. Oh, I'm out. Yes, you can hear me. All right, let's see if you can see me. Let's get this going here. Hey, where are my cameras? I think that's one. Boom. Thank you, everybody, for joining. We're slowly this week working our way down to figure out what technicals to show you. And I'm excited for this one tomorrow because I get to talk about Berkshire Hathaway, one of Warren Buffett's company. He's one of the best investors in the world of all time, and definitely where a lot of teachings and learning. So, got to give homage to Grandpa Warren right here. So tomorrow, I'll see you guys for that.